I think this is the beauty of the time in the market we're in right now. Like users are a lot more reachable and there's a lot more, I'd say like synergies. Imagine you could just build your own wallet and now with our API, you're able to kind of bring in your wallets and build whatever experience you'd like.
We've definitely seen a large wave of interest from wallets on the crypto card side.
AI will change the user interface and how we interact in this example, maybe with wallets, but also in general with a lot of different apps.
More chains should honestly publicly share their learnings. And my hot take is that a lot of the chains should shut down proactively. That's the $1 million question, or even the $1 trillion question, I would say. Like the infrastructure basically is 1,000x ahead of the activity, right? So like it's either the metaverse again or the early internet.
Hi everyone, and welcome to Onchain Honestly,
a podcast about what actually works in crypto as a business.
We're long-term believers in this space, and we want more honest conversations about what's changing and why.
So we explore real models, practical outcomes, and what it takes to build something that lasts.
Hello all, and welcome back to Onchain Honestly. Today we're exploring the business behind one of the most essential products in the blockchain space, and that's wallets. And guiding us through it is Abi, Head of Product at Zerion. Abi, great to have you with us.
Pleasure's mine. Thanks for having me, Alenka.
So, Abi, wallets used to be really just simple key managers, even though we all understand their fundamental role in crypto since the very beginning. But now they may have become something but simple key manager, right? Some consider them as major distribution platforms. Some consider them even as key financial super apps. So what's Zerion's current positioning in 2026?
Yeah, it's a great question. And I think it's helpful to take a step back and maybe even kind of go through the story of how we got here, right? Since I think, like you said, rightly, the wallets in the space have evolved from being, your first touch point in crypto to kind of being like a full-fledged super app. And we've kind of pivoted and evolved within that journey as well. So we started off, honestly, a lot before Zerion even was a term. So we started off in the space in 2016, building smart contracts for a lot of the ICOs and the wallets of that time. And in 2017, what we realized, we in a hackathon built the kind of early version of a portfolio tracker. Since the biggest problem in the space was really how do you keep track of your finances across multiple websites, multiple wallets, multiple dApps. And what started off as a simple portfolio tracker became the first version of Zerion, which is really like a neobank for DeFi. And as we sort of scaled this neobank, we integrated the first few protocols that really made it through in DeFi summer. So this would be like the Uniswaps and the makers and the compounds. We realized that users loved to use our product, but they would always bring their own wallet, right? So you'd connect a MetaMask or you'd connect a Ledger. And these were all great wallets, but we unfortunately couldn't own the end user experience since the signing and the creation of the wallet lived externally. And that was always kind of clunky for the user. That got us thinking, hey, like what's the most kind of high retention product in human history? That's a bank account, right? Like once you have a bank account, you're always going to stay with your bank account for life unless you change countries or unless, your bank account just blocks you, right? So we realized that wallets are really adjacent in that sense. The analogy is very similar to a bank account. And the best experience to build a wallet would be something that's completely native. So we set out to challenge ourselves and we launched the first version of the Zerion wallet in somewhere around 2022. So long story short, like we kind of came into that conclusion, right, accidentally, that like in order to have a high retention business where you own the user experience, but you also are able to like interact with the user natively, build a community of users that are giving you feedback and, asking kind of what they're missing in the wallets they use, we had to launch a wallet ourselves. That was kind of like the evolution of the business. And then in the last couple of years, we've really evolved from being a completely consumer-based company towards like a B2B company. And how that happens also kind of a fun story. But in 2023, we had Uniswap approach us as a business partner. We were always sharing notes as we were using Uniswap's kind of DEX aggregator within our product. And they were interested now in launching a wallet after seeing the success of many other companies launching wallets. And surprisingly enough, the motivation was the same. Hey, we have a lot of users using our, DEX. We have a lot of users interested in, kind of supplying liquidity to liquidity pools. But back then, if you remember, even something as simple as supplying LP wasn't really a straightforward process, and they wanted to own the user experience. But then the hardest problem was the data. Once you actually build a wallet, you realize that what starts off as like one engineer managing a few RPCs ends up being a whole team of like 10 or 20 engineers juggling RPC providers, like adding new chains, being able to show your transaction history. So they were wondering how we figure this out ourselves. And that's when we realized we're sitting on a gold mine of data. Um, and we exposed all the data that we had as simple to use wallet native APIs. And that's how accidentally the creation of our data business was born. And fast forward to today, I'd like to call ourselves as kind of like a wallet infrastructure company. So our wallet is the distribution and the data is the business. So what we have with the wallet is, we have around 500,000 active users. A lot of the users that we have in our wallet are, I'd call like OGs in the space since they've used our portfolio tracker and then kind of you moved towards being like a wallet consumer. And the data is the business since we're helping the same data layer that powers our wallet to everyone else who needs good, high quality interpreted data. So that's large exchanges like Coinbase and Kraken, centralized and decentralized exchanges now like Uniswap, and I think increasingly a lot more newer classes and categories of customers like embedded wallets like Privy or agents themselves through our CLI. So it's been really exciting to see kind of the proof that wallets are still very much core to how we interact in crypto, but the data is also working at scale. And I'd say we just want to double down on that data layer and building the hard parts of data in the next couple of years.
I mean, the really exciting to get into all of the nitty gritty of the API business and, sort of the data layer that you have underneath. But when we, as a usual crypto user, when you look at these data analytics like token terminal, for example, I think the numbers there might be a bit misleading in terms of revenues and revenue sources. So how profitable is the Zerion business actually at this point in time?
Yeah, that's a great question. And I wanted to answer that by not answering that question, but rather pointing out to how impossibly hard a lot of these public sources are, right? Because they rely on aggregating maybe like some publicly available fee captures. So I think for our fee capture, it might have been considering 0x and maybe 1-inch APIs, but not really looking at a lot of the other fee capture APIs. In terms of how profitable we are, we've had actually a couple months last year where we were profitable and breaking even, but it's quite cyclical. It's quite tricky, right? Since the wallet performs really well in a market where we're facing high volatility and users are swapping more. And the API performs really well now, regardless of the market, since we have long-term contracts for a lot of these customers that, pretty much have like a fixed kind of agreement, right? With like an overage on top. In terms of the token terminal data, I think the data was definitely underreported. So it says something around like $500,000 in fees, right? I think we've had a few months where the wallet alone made that much in fees. So probably underreported by quite a bit, but directionally, our largest API contracts are multi-year. Like fee revenue, I'd say, is more of a hedge. So it's quite nice to have both streams since last year, towards the top of the cycle in Q1 or maybe even in Q3, we had several months where both the wallet and the API was equally contributing to the business. And as of today, we're trying to be as lean as possible, like every other company. So really doubling down into like AI native methods of engineering. A big cost of our overall business is obviously still the data and the headcount. And this is really something that we would like to stay and keep the same, and instead focus more on growing the business and growing the overall size of the business.
Abby, and within the wallet bucket, what are the main revenue streams anyway? I mean, I bet that's swap fees,
Mm.
but might be wrong.
Yeah, good question. Very simple. Swap fees has always been the largest chunk, and it previously was the only chunk, right? And then we actually launched an experimental subscription model called Zerion Premium. And what we realized is people were willing to pay for, during tax season, getting access to tax reports, CSV reports for all their wallets. So we started to bundle more features like that. Or if you're a trader, you want to see like your P&L, and it's quite hard to like actually see your realized profit or unrealized profit on certain tokens. If you're like me and you've been in the space for a while, right? Like we've been trading all sorts of tokens, and sometimes we just don't have any idea like where our money is actually coming from. So we started like experiment with that. We did have certain months where that was contributing a lot, since people are willing to pay $10 a month or $20 a month, and then for convenience sake just keep that subscription, as I do with Revolut or Robinhood or some of my other neobank subscriptions. So we did that, and then I think the other part was also a revenue kind of cutbacks from DeFi protocols or chains that we work with, and more increasingly it's also been MEV or other slippage kind of partnerships we have. But I think these are still quite small in the grand scheme of the market. And other areas like on ramps and off ramps, I'd say, are still like they have some footprints, but overall, in terms of like magnitudes, I'd say swaps are the highest still, and then premium is still quite up there as a bucket, and then everything else like the kickbacks we have with teams or the MEV is a much smaller bucket, but they can always increase as the market scales up.
Right. And I'm actually now thinking the very first idea that you put forward during this episode was this comparison with the banking service, with the neobank, right? I can't really imagine a neobank without a credit card inside.
Mm.
So what's your take on this? Because I mean, we've definitely seen like a large wave of interest from wallets on the crypto card side, like most of them did launch one. So what's Zerion's strategy there?
Yeah, we get pitched from crypto card companies all the time, and I love to take the pitches. We also like personally as a power user, I think I use my MetaMask card. I have a Coinbase card. It's nice to use these cards, and with the MetaMask card, for example, right? Like I could just import my Zerion's private key and still use my Zerion wallet, but for that card within MetaMask's UX. The honest answer is just like a matter of priority and resources. We've had a lot of users ask us for wallets, but I say not as many to the point where we want to make that like a major priority right now. But the way it's going, like we've been speaking to teams like Rain and Gnosis, where I think a lot of the work and a lot of the resourcing is no longer needed to be done on our side. So I'd say like um, keep like I'd stay tuned. We're definitely like interested in adding more verticalized services on top. So whether that's wallets or whether it's the better like off ramps and on ramps. Like one thing we did in this space, we realized that more users cared about being able to on ramp or off ramp via their centralized exchange. So a majority of our users are actually based in the US and Western Europe, right? So I think US is like the number one audience for Zerion. And they would rather be able to you have around 85 or 90 million KYC users on Coinbase, right? So an average Zerion user in the US probably has a Coinbase account, and they would rather prefer being able to on ramp or off ramp from SX. So we did launch that with Robinhood, and I think to complete the kind of product lifecycle, a card will obviously come next. So it's quite definitely like something in our radar.
Yeah, and earning an interchange fee wouldn't probably harm your overall economics.
100%. Yeah, it's just a matter of control at this point. As we're a small team, we want to be careful and thoughtful and not, release something without fully committing to it. So I think the time has not come yet. But if you have any fun ideas for cards, you know where to find me.
I'll definitely share them.
I'm also thinking that, the whole thesis about fees on different blockchains, they tend to go towards zero in terms of the size. And how do you actually see the future? What are the primary engines for long-term growth and the sustainability? Or do
Mm.
you don't even consider the fee
Yeah, it's a good question. I was just talking to a few hardware wallets, for example, right? Like a lot of people are testing fee sensitivity. And what we realized is for certain transactions, like for prediction markets or for large value, like complex routes, um, where the goal of a user is just, hey, I want to make a big delta or I want to make a big return, and I'm willing to pay whatever fee it takes to be able to execute at the fastest speed, rate, whatever you call it. I think then a user is less sensitive to fees. Whereas for an average swap or for an average, like rebalancing of your wallet or a much simpler route, users are more sensitive. And what we did, we actually conducted an experiment with our users. So previously we had a slightly higher fee at 0.8%. We actually did not have a fee for the longest time, right? So there were months in 2020, 2021 where we had a month, I think, where we made several $100 million in swap volume, but we made $0 in fees. And over the course of years, we've experimented with a lot of different, fee ranges. But I think the number we actually saw from our engineers as the most optimal was somewhere around 0.6, 0.65%. And what we saw is, I think about that is when the average user starts to look for different alternatives. And this is purely based on surveys, right? So we just surveyed our users, and it kind of is obviously statistically maybe not as significant as like a large scale experiment. But for us, we've been trying to be more careful with how we charge our users. So yeah, we've reduced our fee ever since from 0.8 to I think around 0.67, that range. And if you have Zerion Premium, you pay even less in fees. So that's another use case or another reason to subscribe. Like I also have a Coinbase One subscription myself, since even if I'm a power user on dexes, I always prefer to on ramp or even spend with like sex cards. It's just nice to hedge kind of both regulatory systems as well in a way. So I do think that like fees are one of those things where we've seen conflicting research and conflicting advice, and there's no one size fits all. But what we'd rather do is we have a swap API as well. So if you're a fintech company or a neobank, and you don't want to partner with one specific swap provider, like the 0x's or the 1inches of the world, we have what we call a meta aggregator. So we're just able to integrate all of them. And in a way, you can kind of, if you're already using our data APIs, you can just use us for swaps. So for that, we have a lot lower fees, since most of these companies would prefer to add their own fee on top, right? And we don't want to give them a fixed fee. So those are as low as 0.2%. We were even considering lowering that even further. It really depends on what the end customer needs. So to sum up, I think it really depends on the types of assets. Like we've had assets like prediction markets and meme coins where, users are paying up to 1% and they, frankly, do not even realize it.
Have you actually ever measured the ROI for your premium users for, getting the subscription?
Yeah, I do not have this data at the back of my mind, but I do know that like, the enterprise customer, like this kind of premium user, they churn far less than we expected. So it's almost like, you have so many subscriptions that once you subscribe, you probably forget about it. So that's something that we noticed. The churn was quite low. And in terms of the ROI, I'd say it's also seasonal. Like the ROI during tax season is worth a lot more, since this would be data that they probably spend hundreds of dollars for another CPA or a tool. But yeah, I do not have the exact ROI numbers, but I'd predict them to be, definitely like a few multiples over. And we're also considering, these are all open ideas. And I think this is the beauty of the time in the market we're in right now. Like users are a lot more reachable, and there's a lot more, I'd say, like synergies, right? So we're considering, what we've seen is a lot of premium users or pro users are also starting to use our API because they'd rather use their own spreadsheets or write code their own app. And imagine you could just build your own wallet. And now with our API, you're able to kind of bring in your wallets and build whatever experience you'd like. So another thing we're considering is also bundling API credits with the premium. And I think this would just lead to a whole new kind of subset of a crypto user. You're, a power user like ourselves, who also want to do our own analyses and don't want to be locked into a certain UI. So my hot take here is that the ROI is just going to increase a lot more, since obviously for a long time our UI was very like human centric, but now we're going towards this like data and agent centric future. So that's another idea I'm quite excited with. No timeline or date yet, but you heard it here first.
Abby, and since you, well, are apparently running a treasure of data, who is your user? Can we talk a bit more about the key user personas for today?
Yeah, and to clarify with this before, it's quite different, right? If you think about a wallet versus the data. So which one would you like me to start with?
You pick.
Okay, cool. Well, I can start with the wallet. Since that's I'd say like the more broad category. We've focused primarily historically on power users. We used to call them Web3 citizens, and we don't use Web3 a lot these days. So I would just say like the prosumer segment of crypto is our primary target, and we we see this market growing steadily. We obviously do not expect this to be a high numbers market, but rather a market of very active, engaged users. Fun facts, our average Zerion user has over 7 wallets connected. So this is very much tied with like a prosumer audience, right? Like people trust us enough to connect all of their wallets, not just their Zerion wallets, but also maybe their ledgers or their MetaMasks or their, phantoms and whatnot, right? So I'd say like that is always been the core audience. At some point, we did consider switching towards a more generalist, like normie friendly wallet, but we did see that that is not really our strength. Our strength lied in like how crypto native we were as a team and how we started to build this for ourselves really as the end audience. So prosumers is pretty much the best way to describe that. For the data, I'd say this has become something that's changed as well in the last year. We started off really focusing on wallets, right? So we are the best wallet native interpreted data provider. And what that really means is like out of the box, anything that a wallet needs, like charts or portfolio history or, being able to like see decoded transfers. Something as simple as that, like every RPC provider out there, you think they do transaction histories decoded, but what would take you, several calls to just fetch the transaction history along with prices for your wallet would be a single call with our API. So I say like the core audience was initially anyone building a wallet. So that's how we started off at like, companies like Uniswap and Rainbow, and then evolved kind of as more enterprises started to be interested in launching wallets. Who did they go to? They went to the Privies and the Paras and the other embedded wallets of the space. And they also did not build a lot of this data themselves. So we then kind of moved up the stack towards also powering a lot of these embedded wallets. And I'd say in the last half a year or so, we've seen a new rise of consumers persona, which is really like fintechs and neobanks, and there's a whole kind of broad category of companies pushing and helping this persona flourish as well. So these are like the large BVNKs, or like we've seen a lot of the other Fireblocks and kind of like full-fledged wallet as a service companies. And we also just announced a partnership with the Fireblocks. We actually did a dinner with them here last night in Money 2020 Amsterdam. So we'll be powering, both Dynamic, which is the embedded wallet that they just acquired, and the Fireblocks kind of native wallet for showing simple things like DeFi positions that you'd think is like quite easy to build in house, but isn't. Right. So I'd say like the core audience is still anyone that is interacting with a wallet one way or another. But what we've also seen is another really nice trend, which I think helped us a lot, which is a lot of centralized exchanges previously used to maintain two different products. They used to have their SEX product, and then they used to have their more experimental like DEX product, right? But with the likes of Coinbase and Kraken and whatnot, like a lot of them are converging as they're getting a lot more demand from users to like be able to trade more assets. I'd say they're almost like converging their products. So we've also made sure to position ourselves there and not just advice, but also be like a big part of the data stack. So I'd say, yeah, like we've seen this evolve really fast. Stable coins did more volume than Visa last year. So I'd say like these are all metrics where our focus now has started to become wallets are great, but we don't want to like put all our eggs in one category. and we want to like branch out from wallets towards, stable coins. So we have stable coins balance APIs, and then we have, fintech APIs. So that's, I'd say, like the direction we're moving towards, making it as easy as possible for us to partner with the Fireblocks of the world. And, we want to partner with them rather than compete against any of these providers. And that's the beauty of data. I'd say there's only a handful of companies that are really doing this, and doing the messy work that, helps the space just kind of move forward without any pitfalls or without any like incidents and whatnot. So that's the category in a nutshell. I think we're still figuring out the B2B persona, but really anyone that needs crypto data.
Have you ever believed in the fat wallet thesis at all?
I have. And could you refresh me on like what you consider the fat wallet thesis?
It's just generally that, the value accrues at the wallet level for the most part, like compared to like one layer below, which is essentially more core
Mm.
infrastructure. That's at least what I understand under it.
Yeah, I see. So it's kind of like the fat protocol thesis in a way. So most of
Exactly.
the
So it's like just reversed, right? And since you're saying that you don't really want to
mm,
focus on the wallet side only anymore, and that's exactly why you're pivoting into alternative directions as well, which I think is pretty fair given the market
yeah,
dynamics. It's always good to diversify, no? But given the Zerion example, I think it's really illustrative how you guys
mm,
are trying to balance the risks of further growth and development.
I agree. I mean, I'd say like what we consider as the most important moats has been tested in the last year with AI really reducing the, costs of building and costs of replicating. So I do still believe that the fat wallet thesis would hold true in, for example, distribution, right? Like distribution is one of the reasons why we still have our wallet and we're always going to continue maintaining and growing our wallet, since the wallet is the way a lot of customers and a lot of data partners even find our API, right? They come to us being like, hey, like, how did your wallet show us this Morpho vault that just came up and my other wallets didn't show that, right? So I still believe in the fat wallet thesis to that extent that it still owns the end user, that's distribution, and it still has access to order flow. But I do think increasingly that second part on order flow is being challenged with, AI agents. Like we do see large enterprises and, kind of crypto companies alike really believing that the wallet of the future may not even have a UI. We ourselves launched a CLI there. So I think the wallet of the future might not necessarily be the wallet we think it is right now. And I think that's why we're being a little bit cautious on not over indexing on, hey, like this is the UI and this is the company that currently might have like a lot of users. But it can change really fast if, similar to how all of us started to experiment with OpenClaws and like, no longer be loyal to our AI agent and try to just kind of move around and experiment with models. I definitely think there can be a space where wallets become a lot more fluid. And, as we also experiment more with like better security, like better ways to store private keys, a traditional EOA wallet can quickly be obsolete, right? Like with NPCs and with a lot more standards coming up. So I'd say that's what I'm more cautious on. Like the fat wallet thesis still holds true at the fundamental level, but the pace at which it could change. And I have seen value accrual because the fat wallet thesis assumes that probably protocols may not accrue value, or the suppliers of capital might not accrue as much value as the interface curators, right? I think that can also come back. We recently partnered with teams where a certain protocol um, that wants more access to our users may just choose to do a kind of mutually agreeable partnership. Whereas previously, I think protocols and a lot of especially like DeFi protocols, were not really communicating a lot with wallets. But now we're seeing a lot more. They stand to benefit from our users, but we also stand to benefit from their order flow or more native ways to like share revenue. So I definitely think it's kind of like we had a season where wallets were able to dictate a lot of the end user experience. And that was probably what came up with this fat wallet thesis, being something people are bullish on. And then now I think we're coming back to like a neutral state where protocols and chains themselves are also having more power and more ability to dictate, what they do with wallets.
I think this whole idea about how AI will change the user interface and how we interact, in this example, maybe with wallets, but also in general with a lot of different apps. Before we dive into this particular element, I also actually wanted to talk about the costs, because you actually also tried owning your own infrastructure, but have currently decided to pivot. So can you actually talk a little bit more about what have you learned about the costs of running your own chain?
Yes, certainly. I missed a part of your question. I think you got cut off, but from what I understood, this was probably related to our zero network. Is that right?
Yes. So you try to own your own infrastructure through Zero Network,
hmm
but also have decided to sunset that now. So what have you learned about the costs related to running your own chain?
I think the biggest thing we learned, and this is a great question, since I even put out a tweet the other day saying more chains should honestly, publicly share their learnings. And my hot take is that a lot of the chains should shut down proactively, just because, they don't have the necessary, like, there's two factors here. One, a lot of chains just call it quits because they don't have enough TBL or enough like monetary incentive to even like cover their paymaster or their main costs. And the other is we don't need this many chains in the space, especially chains competing on no proprietary or factual differences that can, provide any value to users. So that's my hot take. I really think like, I wouldn't put a number on it, but definitely more than half of the chains will probably not exist in a few years. That being said, we are always up for an experiment. So our question when we launched Zero Network was like, how can we launch a gasless chain, which means, we subsidize transactions only for humans. Um, but the bet there was that users will really care about gas fees. And what we've learned over the years is that a user doesn't really care, because it's very similar to what we talked about earlier with transaction fees, right? If there's a action or an outcome that a user wants to have, they will pay whatever fee needed to do that. So I think that's really like one of the biggest cost components for us, being able to subsidize transactions. And this would be either us or protocols themselves that would subsidize this. And the equation did not balance. So we did see our TVL grow towards, the kind of like almost $10 million a few months after launch. We had a lot of very exciting demand over NFTs, since NFTs are one of those areas where, having no gas fees makes it quite amazing. It's like a low barrier to entry for anyone to collect an NFT now and buy an NFT. You can even get free NFTs. And now you actually own this digital asset on your wallet without having a single dollar to have spent on it, right? So I'd say like we had experiments like that. We had a campaign from one of the first NFT creators that was actually retweeted by Elon Musk. So we had a lot of like fun milestones. And I think the entire project rallied the entire company together, since it involved not just, engineering on the protocol level, but it also involved a lot of ecosystem building, like understanding, how you onboard infra providers and teams and consumers. But that's the second category. So the first category for the cost was like this paymaster and being able to figure out the gasless experience. I think the second category is like how hard it is to actually launch an ecosystem that people care about. I think y'all probably know this as well as people building an ecosystem yourself, right? This requires a lot of effort, and you're competing with chains that are magnitudes bigger. And that is something that we couldn't sustain. It's different having, one person focusing on ecosystem versus an entire team. And the third cost was just the infra cost to run the chain, right? So what happened in the last half a year is that even though the infra costs were quite low for us and it was easy to continue keeping the chain on. And then I say low, I mean very low, 5 figures a month. So it was not something that would, be like a big issue for us. And we were still making money from just like order flow on the chain. And what really changed is like, as a company, we want to signal that what we're doing is what we're focused on, right? So it's easy to keep something going, but it's hard to like call the decision and break up with it. And our big view here was like, hey, like this would probably be a positive sign for the space, signaling that one, we're focusing and doubling down on our wallet and the wallet data. And two, it's okay if your chain or your experimental product doesn't work out. The first example that I would credit to that shut down their chain was Public Goods Network, a chain that Gitcoin launched back in the day. And I loved that they were very transparent about the reasons on why they shut down and how they went about the migration. So I think I personally use that as inspiration, separate from like how the team kind of perceived the decision. So that's just like what happened in a nutshell. So it's just sunsetting them is like the zero network is like us basically reconcentrating on the layer that we believe in.
Yeah, I mean, that's, I think, as you said, everybody is really doubting about the necessity of most of the blockchains and different types of products that are currently there. So also actually touching upon that, being very transparent and open about why you do things and how you do things. Do you have any sort of insights or suggestions how to operationally sunset an infrastructure if, you still have users there, there's still assets? What's the procedure?
Yeah, good question. I mean, there's no playbook here. That's the short answer, right? Like the short answer is it is really tough, especially when you have people who invested time and effort in building something and contributing to the chain or money, right? Capital is one of the biggest ways to show you have skin in the game. But I think for us, the only real learning is be as transparent as you can, give people an appropriate window, and I think like you just can't satisfy everybody, obviously, but like you should do what you think is as clear and rather over communicate than under communicate. So we did that. And obviously behind the scenes, we have a ton of support from our partners, whether it's like, the bridge providers or like the kind of infra partners that spend time and effort also betting on, this chain. And I would say like the funny other side of it is like we're also a data provider. So we also see the problem of there being a lot of chains since we need to spend a lot of time and effort on our end integrating, maintaining, and over time kind of ensuring chains are valuable to our users. So we also get it. I think that made it easier for us to work with these partners and with our users. And yeah, kind of like we announced our deadline for the withdrawal window to be the end of July. And we've seen most people have already kind of gone through that process pretty painlessly and just making sure everything's very clear and the user experience itself in our wallet is quite easy to understand. Since a lot of times, when something happens like this, you don't even realize that, hey, this chain is shutting down or this wallet is no longer going to be functional. But for us, we looked at what users in our wallet held funds in Zero Network, making sure we're able to give them push notifications. I think it's just a simple, like, let's just make sure we have a kind of like a checklist and go through them and over communicate.
I think this is exactly something that Kaiser and myself really wanted to show on this podcast, like cases of, failures, and we should be open about it and we shouldn't be afraid of talking about it transparently. It's unfortunately one of the very rare but very illustrative cases. So, Abi, thank you so much for sharing that.
Of course, yeah. And I think like for every failure, you'll have, 100 wins. And it's just the nature of working in this space. As someone who's been in the space through multiple cycles, you almost become anti-fragile, right? So I think like this, if anything, taught us to take more risks and more experiments, and you never know what sticks. I like to say it, I like to call it as we just take side quests when we have the conviction that something can stick. So no, I appreciate that call out, and we talk about these things privately, right? But I think it's useful to talk about these things publicly more as well.
Yeah, 100%. I think there's like this one more topic. I mean, we have endless questions, of course, but the hype word or the hype topic recently, AI agents, are they the next API customers? I think in a way, this field is really nascent still. I think personally, we don't maybe fully realize the business models, the use cases there. But you have recently launched an AI agent tool, for manage portfolios, sign transactions, and all the fancy things. And I was wondering, do you actually see a real business case behind it? Let's say, can we probably can't talk numbers, or is this more about let's not, fall behind because everybody appears to be doing it?
Yeah, that's the $1 million question, or even the $1 trillion question, I would say. But I have a few thoughts here, right? Like, one really is that I kind of told this earlier. We announced the CLI, and the CLI is a native way for us to manage both the data that we have. So you're able to, if you're a product manager at a company, like, this has been incredibly helpful for a lot of our customers, to just one shot understand everything about our API. Whereas previously it was like, here's our open API, here's our schema. Like, the engineers would really need to understand like whether we support a certain data that they're trying to, kind of data point that they're trying to integrate. So the beautiful thing with the CLI was it marries the data. And now if you wanted to give your agent a wallet, we built it on MoonPay's open wallet standard. So we actually now have skills built by Polymarket, by LeFi, by MoonPay, extending our native support for the data that we have. So you're able to like give a wallet to an agent, and you're able to, with that, add a lot more very, very illustrative, detailed actions. So you could, for example, have your agent sell half of your ETH to USDC if a certain market incident was to happen on Polymarket. Like, the if then kind of connotations on top really are fascinating, and you can do all of this with natural language, right? So we built the CLI quite simple, in a quite simple manner, just because, one, the CLI itself was built by Claude Code. How Claude Code was built by Claude engineers that were bots and not humans. So it's quite easy for us to open that, right? So I think that's the beauty, like the extra experience of like, no one really owns the CLI. This is a fun fact. No one owns the CLI as a product internally. It was purely bottom up built in a hackathon fashion. And it works perfectly since we are also customers that are constantly iterating on top of it, right? And what I think on the commercial side, so that's kind of like the first real motivation. We did not even have a commercial angle for this product, right? Just as we did not for our X402 support or collaborating with Tempo and Stripe on machine payments protocol, right? A lot of this, I'd say, is like X402 and MPP, they've done like tens of millions in volume against like a multi-trillion-dollar commerce market. Like, the infrastructure basically is 1,000x ahead of the activity, right? So like, it's either the metaverse again or the early internet. But like, you don't really know. Like, nobody knows which one it is. So I think like that's the honest framing. It's funny, like, I think Alex, like Nansen's founder, was tweeting about this. He was like celebrating the fact that they crossed $100 in X402 revenue after several months. And we did the same. We crossed like a few $100s in X402 revenue, right? So I think like that is not the picture. But the bigger picture, and this is where I think I'm the most bullish on, is that I went to like a meetup in Williamsburg. I live in New York City, so we have a lot of crypto meetups. But this was a meetup organized by this company called Merit Systems. They A16Z backed, build a lot of fun products that really are trying to push the needle forward on AI X crypto. So it's, they have something called Agent Cash that I use every day. So I can just top up with a stablecoin or USDC wallet a bunch of money, and now use that to pay for expensive APIs per query. So all I need to tell my Claude Code is, hey, like, go and find me daily, apartments in New York that fit my criteria. And it would use like Exa, it would use like Firecrawler, it would use like StreetEasy. It would kind of like use these APIs that I previously need to sign up for individually, and now just use like per call a few cents. And I think these are all areas where I went to their meetup. Not a single person in their meetup, apart from like a few people we knew, were like crypto people. They're all developers on Shopify or like direct to consumer founders. And they were using crypto under the hood, right? So for me, when people tell me that agentic commerce isn't real, I'd say like that really showed me that it's not just a crypto story, but the potential here is way bigger than the kind of customers we have right now. So this is a long way to just answer that. I do believe it's more of a, as of today, like a partnerships and like a much more of like a signaling, virtue signaling space. But the use cases that we have are still very like early kind of majority hobbyist use cases. But the metrics really show that yeah, it's either the metaverse again or the internet, right? So we kind of launched the CLI. We have a few hundred active users. I was just looking at the data yesterday, and these are users that are essentially this is one of their core AI workflows now. And once you have a core AI workflow, I'd say like you do kind of stick with it until something brand new comes out. And the cool thing here is it's just going to compound as AI evolves as a space. So I definitely think we're still quite early, but this is nowhere close to being, a major revenue component in our top line, right? I'd say it's more like a major area of excitement for the team to rally resources around and push ourselves. And we're pretty. It's pretty easy to build skills. It's pretty easy for anyone now to be technical. But I think the hard part is like talking to users and trying to understand like what people do, since we ourselves are trying to figure out the use cases. And that's the hard part. Like you just got to talk to your users, do user interviews. So it's kind of like fun for me because it's like what I did when we started Zerion, and we're coming back to that in like a more agent centric way.
But are we looking ahead? Do you think it will heavily affect the switching costs for the user of wallets?
Yeah, it probably can. I mean, I do think it's going to be a lot easier. Like one thing we're doing with our CLI, we don't have this yet, but soon you'll be able to use our CLI and sign within the Zerion wallet. So if you're an agent currently, you can just give your agent its own wallet and it can sign natively. But in the future, guardrails are really important, right? So I think it might not be the case that switching costs are necessarily easier, but it would rather be something that you can use hand in hand. So you have like a personal human wallet, and then you have an agent wallet that might have more guardrails, more policies. I think that's the part people fail to realize. You can't really give your agent all of your finances and expect it to manage it in the best way possible yet. But I don't think it'll be soon that it would even come by. I'd say still like having a personal human native interface is the way to go for the majority of users. And having an agent native interface is just going to make it more supplementary, to your existing wallet. Switching costs, though, I'd say it'll go down slightly over time, but it's not going to be something that I think is going to be like a massive change all of a sudden.
Yeah, maybe, to wrap it also up slowly this episode, if we were to have Zerion over again in 12 months, what will have changed? What are your plans for the upcoming year?
Abi, and we definitely will have you in 12 months.
100%. They'll have me, and I think we will have hopefully a better and a different market. So we'll have even more enthusiasm and things to cheer on. But one thing that I wanted to, kind of always reemphasize is like we are here to win, right? We're not just here to like, grow with the market, but we're here to win the market. And what this means is like really staying true to our promises that we've given to our customers and making sure, we have some of the biggest fintechs in the world that we're working with right now, launching their crypto native products in the next few months. And these require engineering and infrastructure and reliability commitments that honestly keeps me up at night, right? Like, so I think like one of the biggest wins here will be being able to like see these users who are large enterprise customers go live and be happy about it and actually stick in crypto long term, right? Because like I think we are also burnt out from seeing in prior cycles a lot of experimental, initiatives coming up from large companies, and they actually ended up causing more harm than good to crypto. And I think this time is different. So one thing that, just to answer your question, in the next 12 months, we win this not by winning businesses necessarily, but by winning loyal fans, right? And us being able to be there early and help some of these companies make the right decisions. And um, we don't need credit there. We just need to be involved and invested. So that's the big angle to the data side. Like we would really want to win, and we believe we have the necessary team and the kind of velocity and momentum carrying us. But then that aside, I think like it's also more of a human story. I think we're at a point where we can do a lot more with the same amount of people that we have. And I think really able to take that operational efficiency and toy around with how do we marry this wallet and this data business more closely. So we have like, for example, right, like a founder strategic offsite coming up next week, where we're all going to be flying to Azores in Portugal and spending a week really answering that question. Because like that is something where I think it's quite like helpful. Sometimes you've seen companies in the course of history, right, where they have several products, but then they find a way to marry the product to build a super company. We've seen this with Alphabet, we've seen this with Amazon. I'd say like we're at this point, I think, where in crypto, a lot of companies moved from being purely consumer to then being purely business to business, and then now trying to figure out, okay, how do we want to kind of blend our businesses together? So I'd say that's the other thing I hope we figure out by the next 12 months. So I can come to you, Kesa and Alenka, and tell you, hey, like, this is our story now. And this is a lot clearer for you as well, right? As the end audience. So yeah, these two things are personally, selfishly what I would love to see. And beyond that, I would just hope that as many people survive this cycle, because I'd say like we are at a cycle where it's quite like I have a lot of friends in crypto and I'm seeing them leave crypto, right? And I've seen this happen in the past, but I do think that this time um, we have a lot more of a supportive community of friends and just people in the space helping each other out. So I'm seeing this happen a lot more also in business. So I really hope that we're in a position to be able to help as many people as we can.
Abi, I'm being honest right now, no pun intended, but that was extremely interesting and deep. Thank you so much for joining us today.
Thank you for having me. And fun note, I had a sore throat until today morning since we've been going hard at this conference, but this was also one of the most fun conversations I had. And I think one of the most fun interviews in a long time, just given the thoughtfulness that went into the questions. So thanks for having me. Even 6 months from now, I'm happy to be back as you've offered the opportunity. But yeah, love what you guys do. Looking forward to more and many, many more episodes.
Even next week, Abi, you're always welcome.